For a final year wrap-up of what's happening to the markets now, what will happen next year, and what should you be thinking about QBE and Qantas? We have two of our favourite regulars, Simon Bond and Roger Montgomery. Guys, thanks for joining us on the final show of the year.
Thanks, Peter. Great to be here.
Now, before I start, you're going to be quick here, Simon. I know you're often not quick. Why did you send me a YouTube video of an Isle of Wight festival in 1970 with one of my favourite songs, as a matter of fact, All Right Now? Well, what was that all about?
I was trying to find some good news.
Yeah. Okay.
And the song...
You found it back in the 1970s.
In the 70s, yeah.
Yeah, it's All Right Now.
All Right Now. It's trying to...
By Free, wasn't it? Free was the...
Yeah, yours and my era. But I was thinking to myself after we've seen all of the bad news from Qantas, etc.
Yeah.
We seem to be... I think we're throwing so many people on the unemployment scrap heap.
Yeah.
And that's what you and I and Roger have been worried about for probably 2 or 3 years.
Yeah.
And gosh, that's going to be a big challenge for next year.
Yeah.
I think I talked to you earlier in the year about how I had breakfast with Paul Fletcher, and I said one of the issues that we've got in Australia is that we've allowed a situation to develop where we don't add any value to our exports, and we end up with politicians telling us that our balance of payments current account deficit is structural. It's not structural. It's just that there's never been policies put in place to allow industries to rise up to add value, and at the same time, everyone wants to be paid more. What will end up, the recipe that we've got in place right now, is that we end up being serfs to foreign landlords, and all we end up with is a salary that they determine.
Well, it's funny, for my Australian article for the weekend, I actually make the point that if Keating should be remembered for anything, and Hawke as well, is they got everyone together and said, hey, we have a big problem here. Deficits, debt, unions aren't productive. What are we going to do about it? And that come the Accord, the floating of the dollar, financial deregulation, all that sort of things, right? But now, there's no... Well, the last time a consensus call was put out there was called work choices, and that was rejected. So now we need this government to come up with a game plan for the next 3 years, because Holden's given us 3 years.
What the US has is they turn a blind eye to immigration from South America, and there's a cheap source of labour. Singapore's another example, cheap source of labour coming from Malaysia and Indonesia. In Europe, it's the Eastern European, the Eastern Bloc countries, cheap source of labour. Australia doesn't have that. We don't want it. We turn them all away. They want to work. They're happy to be paid less, but we say, no, you'll steal our jobs.
Big challenge. Okay, that's the big picture, but we'll address this later on next year or whatever. But let's go to two big issues, Qantas and QBE. Both those stocks. What do you think, mate? Are they buys at these levels?
I can remember being on this show when Qantas, on the day that Alan Joyce was appointed as the CEO of Qantas.
Our Jetstar into Qantas, yeah.
I sat here and I looked at you and I said, Peter, this is the beginning of the end for Qantas.
Right.
And you looked at me and said, oh, that's a bit harsh, isn't it?
Yeah.
I said, this is... Now, we sit here now, you go to Sydney Airport and you have a choice. You can get on Qantas plane or you can get on a Singapore Airlines flight. Qantas can fix their problems by improving their customer service.
They need to do a lot more than that.
That's the start.
Cheaper planes and more expensive fares.
All right, so in a nutshell, you're not a Qantas buyer, Roger. I can bet you've never been. You've never been. So.
Or Virgin, for that matter.
Okay.
You know, airlines are no different. The economics of airlines don't ever change.
Yep.
You know, I've written about it extensively.
Yeah.
I've been in the press for the last 10 years talking about it. The market capitalisation of Qantas is less than the money that's been tipped into it by shareholders over the last 11 or 12 years.
So even at $1, even if they sold their aircraft and leased it back, the woolly option, you still wouldn't touch them.
Well, if you were a trader and you could time the tops and the bottoms, you might have a go. But as an investor, the long-term economics don't change and the price follows the economics.
Okay, let's go QBE. You last. QBE has been in your dividend income portfolios. Is it a buy at this level?
We thought it was a buy 2 downgrades ago, but
yeah.
we were wrong. And gee whiz,
you going to give them a third chance?
I just don't know.
Okay. A lot of people are telling me this. Roger, you definitely know. What are you saying?
Well, I don't definitely know, but I know this. I know that...
You genuinely look like you definitely know.
If you believe that the problems are resolved in the United States, they're not making money over there. But if you believe those problems are resolved and they've got that done, and I suspect they're not, because it just takes a long time, And when the CEO comes out and says we're still dealing with the problems of the past, it's a swipe at previous management, tells me they're not taking responsibility. So you've got to take responsibility, you've got to fix it. If you believe that the problems are over, then the big two themes that are in QBE's favour for Australian shareholders is a falling Australian dollar and a steepening yield curve in the United States. Those two things have massive positive ramifications for QBE earnings, but they need to fix the United States. And you won't see an improving share price until investors, professional and amateur alike, believe that those problems are fixed. But then it could re-rate very quickly.
But when you do a calculation of the intrinsic value of a company, there are always some assumptions in there, aren't there, Roger? And so one of the foundation assumptions would be is if the problems that are prevailing now ends up being the last one, it looks like good value at these prices? We thought the valuation was where the previous price was prior to the downgrade. Okay, about 12... About $13 or thereabouts. And then the results came out, and now we've downgraded our valuation, obviously, with the new information. And the reason why it downgrades is because less money is being retained in equity. So when they report their profit, it's smaller, and so less goes to equity, so the equity grows at a slower rate, so the intrinsic value grows at a slower rate, and in fact it can be set back if you believe that the return on equity is going to take longer to actually get up to that level that you believe is attractive and sustainable. So it's going to take a little bit of time. Okay, but you're not definitely, and I've got to say, I'm very wary of both airlines and insurance companies, but you're more wary about Qantas than QBE? I can absolutely, if you ever hear me saying that I like airlines, then somebody's got a gun to my head. Take you off medication or put you on. There'll be a secret password that I'll give you, and you'll know to call the police. Okay, because I'm in danger. Okay. Let's go to you now, because you've been hanging out for a sell-off because you've been holding cash in your portfolio. About 30%. Yeah. All right. So, do you think it's going to go further down, or do you think this is a nice sell? I don't know. What I do know is that stocks were expensive, and for about 6 or 8 weeks we were twiddling our thumbs in our investment committee meetings saying, well, there's nothing to do, we can't find anything to buy, nothing that's good quality. Nothing. You've said on the show as well. And we couldn't find anything. Are you seeing stuff very boring? Yes. Give us one or two. Well, Vader, for example. You've already tipped that. No, that was good. Sorry. Okay, so let me give you what I thought I'd do. What I thought, because I thought you might ask me that. I thought what I'll do is for the year ahead, I'll just give you our top 10 holdings. Okay. So I'll tell you what's in our portfolio. 10 stocks very quickly. SEEK, CSL, Woolworths, Macmillan Shakespeare, On Watch, TPG, G8, an education company, Challenger, The Reject Shop, Ainsworth Gaming and ResMed. Okay. There's 10 stocks that we have they're our 10 largest holdings. Now, before everyone gets too excited, the largest weighting that we've got is 6.5%. That's the largest weighting. So, we're not going to blow up the farm if one of these goes wrong. No. And there's other stocks. But also with the market coming down, people might actually see that there's actually a good entry price. Correct. What about you? What do you like?
I think next year, I'll tell you what I don't like, the traditional broadcasters. Yeah. I was baffled why... Nine Entertainment, 205, the low end of the range. Yeah. I think today it touched 180. I was sitting there thinking, why would anybody in their right mind have bought into Channel 9? And I went back through the archives, and I found a note that I wrote on your blog. The date was the 6th of December 2010, and it was titled "The End of Broadcast Television." Yeah. And in this article, it was with this 2010 saying 3 years ago why you do not buy the traditional TV businesses. Yeah. If you look at the US at the moment, the 5th largest network in the United States is currently Netflix. Probably next year it'll be number 3 or number 2. Now, where I'm going with this is that you've got midterm... And Netflix actually made a television program this year. They've made 2. House of Cards, did they make that? With Kevin Spacey. And another one called Orange is the New Black. It's a real threat. Okay. But next year you've got... Rob Ishak, who's coming on after us, he's met Kevin Spacey, I think, or talked to him about this, so he might talk to you about that. Okay, thanks for letting me know about that. Ask him why they used Kevin Spacey in the show, because they actually chose Kevin Spacey before they chose the show, because of the big data mining that they'd done on every program that Kevin Spacey had been in and what it meant for the audience. Okay. Right. But come on. Well,
Roger's given us 10 stocks.
Yep.
Give us a couple of stocks that you really like for this year.
Okay, well, just to preface that, next year you've got the midterm elections.
Yes.
Okay, so
It's in the USA, ladies and gentlemen, just in case you don't know what he's talking
you've got Janet Yellen coming in as the new chair.
Fed boss.
You've also got 2 vacancies.
Christine Romer's going to take the vice chair, I reckon.
Okay, well, you've got 2 vacancies that are going to be filled by people from the left. So you're going to see ongoing stimulus. Whether they taper or not, they're going to come out with something else that's probably a different name, but looks the same, smells the same. So you've got easy monetary policy all throughout next year.
In fact, Simon, Christine Romer, who might take Yellen's spot as vice chair next year, she has come out in a statement and said that fears of a bubble are irrational. So those Fed board members who've talked about bubble and worried about asset prices, she said that's irrational. You know they're just going to put the foot on the accelerator and keep going. It's a regime.
Because they're kind of worried about deflation rather than inflation at this point in time, aren't they?
Which we've talked about, again, for 2 years because of the impact that technology's had on it.
Yep.
So what sector do you go? You go healthcare, of course. Ramsay Healthcare, I think today the market was down 60, 65 points.
Ramsay was up,
Was up 3%.
Yeah.
I had somebody ring up and sell Ramsay at $20 and said that this is outrageous. And I think what they're now 34, 35, and that's you're probably buying expensive certainty, but the sector, I think the sector as a whole is somewhere that's going to be safe next year.
Okay.
And we're looking for safety in an uncertain market because of the fears of people not consuming because they're worried about their jobs.
Well, guys, they're giving me
It's about fair value,
Okay.
according to my numbers.
Okay. And the guys are giving me a wind up here because this is the last show. It's a big show. Thanks very much for your contribution
Pleasure.
this year and the
having
years
us.
in the past. And if people really need a fix of Simon Bond, you can go to my switzer.com.au website. And Roger, of course, is in Switzer Super Report and everywhere else. Thanks for joining us in the program, guys.
Pleasure, Peter. See you
Thank
next
you.
year.